All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're also happy and grateful for each and every one of you being here with us this evening as we take a look at the technicals and the fundamentals of the Forex market to see what we can take advantage of. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots and lots of notes as we go through the pairs, and let's make sure that we participate and engage. So first item on the agenda, if everybody can hear me loud and clear, drop me a 1 in the chat and we can get this session going. All right, awesome. Appreciate the participation. So let's dive right in and take a look at what's going on fundamentally, right? We've got some big days coming up, right? So if we go and we take a look at today, we can look at what happened with the Canadian dollar, core CPI, right? Missed a bit, CPI missed, but core CPI came in pretty decent. So when you break down the core numbers for Canada, right? So for the second month in a row, the data that came out overall, right? When you look at the core, is that inflation came down a bit, right? For 2 consecutive months. So we're going to continue to keep an eye on that. So what does that mean, right? So when you talk about forward guidance and monetary policy, you have a lot of speculation that has been out there with Canada to say, hey, in their meeting come October, we may be looking at something higher than 50 basis points for their next interest rate hike. But now when you start to look at some of the CPI data coming out, core CPI, now you start to think, well, maybe we won't get anything higher than 50 basis points. And that can weigh on the Canadian dollar, right? We know that the Canadian dollar is also a commodity currency, oil being the number one commodity, and we know that oil price is bouncing around. So we'll continue to follow the data on the Canadian dollar. So that was the main thing from today. And then as we move into Wednesday, we have the FOMC statement coming out. All right. And we've got the federal funds rate for the United States. So we are expecting 75 basis points. That's what the market has been pricing in. But there's some speculation out there that we may see 100 basis points, but the majority consensus is 75. But we will see. And then at 2:30, we've got the FOMC press conference. That's always important. So you'll get a lot of times you'll get an initial reaction from the federal funds rate, and then all the investors are keyed into the FOMC press conference to see what Chairman Powell is going to have to say in regards to how the Federal Reserve is going to move forward, okay, from tomorrow. So big day tomorrow, okay, big day, very important. So we'll see. Now, what could happen is that, hey, we get 75 basis points. The dollar's been a strong bull, keeps going up and up and up and up. And what we may see, being that it's coming into some key technical levels, the DXY. So what we may see is, okay, well, 75 basis points, listen to the FOMC press conference, and then you may have some relief on the dollar, right? So we may start to see a correction. So maybe an initial push, then we start to see the dollar correct, right? We've seen that happen before. So we shall see, all right? And then also Wednesday is always tentative. It's never an exact time with the Bank of Japan, but you have a monetary policy statement from the Bank of Japan as well. And then moving into Thursday, right? You've got CPI coming out for Japan too. Now Thursday, we have the Swiss National Bank monetary policy assessment and the policy rate. Now, Swiss National Bank, right? When you look at your major currencies, the last bank that's holding negative interest rates, I think they're at negative 0.25% still. Yep, negative 0.25%, and looking to move 75 basis points, right, to 0.5%. Okay, to 0.5%. So we'll see. We'll see how it goes. Now, they are concerned about inflation, but they're in a better position in the U.S., Europe, and the U.K. in regards to inflation, but there are some concerns. So we'll continue to see. There's some speculation that maybe they don't do 75 basis points. They may come in at 50 basis points. I'm leaning more towards, from what I'm reading, overall, the sentiment is 75. But here's the key thing. Whether it's 50 or 75 basis points on Thursday, they are going to move out of negative interest rates for the first time in a very long time, right? So we see that negative 0.25, expecting 0.5% there, right? So that's 75 basis points added on, right? You get a net 0.50. So some pretty important things. And then we have also on Thursday, right? Very, very busy week. We have the UK and their official bank rate statement. So we'll see. We'll see if they come with 50 basis points or if they move higher. And then, of course, right, we want to see the monetary policy summary coming out of the UK. So very, very important these next couple of days. So we should see some volatility in the market. Hold on one second. Welcome everybody that just joined us. Dominique, question. There you go. I think you should be okay now.
Hello?
Yep, you there?
Yes, I had a question. When you say when something is already like keyed in or priced in, what exactly do you mean by that? Like when you talk about, go ahead.
Yep. So you can see like the price action on the US dollar, right? So see how it's going up. You can see like even with people have been wondering what's going on with the Swiss franc, right? It's been showing some strength. That's because people are buying and exchanging based on the anticipation of a rate hike. You understand?
Okay. Mm-hmm.
So that's strengthening that currency ahead of that rate statement. So by the time we get to the rate statement, and it seems to be happening at a faster rate, during these times where rate hikes are being priced in, seems like even faster, and so you're not necessarily seeing, unless it's a surprise rate hike, like, hey, we were expecting 75 and we got 100. Typically you've been getting, spikes, and then you can see it even kind of tail off a little bit afterwards because they've already been pricing it in, right? We're buying that currency, now, right? Because your interest rate goes up on the currency, right? It becomes more expensive, right? We agree on that?
Yeah.
So you see investors starting to price. That's what they mean by pricing in the 75 basis points already, for example, for the Swiss franc. So you can see lately how it's just been pushing anything right against that Swiss franc, has been moving in favor of the Swiss, right? So just like with the US dollar, you see folks are pricing that in. Bond yields have been up, even though it corrected a little bit today, but then it kind of took back that entire correction almost. But that's what I mean by that, is that they're already expecting it, and so you're already seeing the price action react to it, so to speak.
Okay.
So
thank you.
You're welcome. You're welcome. So tomorrow, that's why it's always, whether it's non-farm payroll or rate statements or any major report that's coming out, is usually a series of things. That's why it's so hard for traders to try to time fundamental, announcements. And a lot of times that's where you see traders, over leverage and blow their accounts, because it's usually a series of things that's going to cause multiple market reactions during that time. So sometimes it's best to, stay clear, like not enter a trade. If you're already in one, then you're just making a decision how you want to manage that trade at that point. But typically it's not a good idea to try to trade one of these events that are coming in, because like you say, you may see an initial spike, like, okay, 75 basis points, we were expecting that, but then you could see sometimes where that becomes a sell-off in the dollar, right? And then there's the FOMC press conference at 2:30, where Chairman Powell may use some type of language that's different from what he may have used during his last press conference, that kind of changes the sentiment. So it can cause the price action to kind of move, in both directions, sometimes violently. So that's why it's hard to trade those events. And we always recommend that you kind of stay clear in regards to entering new trades during that time. Now, we traditionally, right, we can do it on all time frames, but we traditionally like to swing trade. So if you're a trader that's trading higher time frames and you're using long-term targets, you're not so, unless it's just an explosive fundamental move, you're usually okay because you're using a wider stop. Your take profit target is a lot wider. So you're able to absorb it, right? So if it moves in your direction, good. But if it pulls back and corrects a bit and moves in the opposite direction which you're going, you're typically able to absorb that because you're looking at the overall larger trend. And it really takes a phenomenal fundamental occurrence to completely change your trend. So now if you're more of a day trader, intraday trader, you definitely need to know when these occurrences are happening, right? Because they can move price 100 pips. We've seen 200 pips, big time moves in the market. So if you're more of that day trader type, a lot of times they'll just hold out and get out the market. If you trade it with a firm, a lot of times a lot of firms have rules based around not entering trades, within a certain amount of time of a fundamental announcement. So these reports are definitely critical. Okay, so that's it. So a lot of action coming up over the next couple days, and as we move forward through the end of September. Now, for the Canadian dollar, their next meeting I think is in October, where they're expecting 50 basis points. So we'll continue to track it. If we switch over to trading economic, of course, Wall Street struggles for traction, right? And that's just ahead of, right? We know that looking to raise rates, okay? And I mean, when you look at the report, we're still, right? You're trying to get it to slow, then you're trying to get inflation to come down. So the first task is to get it to peak and then come down. So you're still looking at a lot of speculations that it could possibly be another 225 basis points before the Fed is done hiking rates. So we may have a ways to go. Like I always say, the good thing about the Forex market is you make money on the way up and the way down, right? Freely. The volume and the volatility is there. So a lot of cool things going on with the fundamentals. Any questions? No?
No.
Okay, we're good. So, hey, if you're new, right, what's most important right now, if you're brand new, is just know that these things are happening, right? So we want to watch what we do in regards to placing trades around these events, okay? And then on the Forex Factory, right, I know we have people from all over the globe, right? Just know that these are all based in Eastern Standard Time, okay? These fundamental occurrences, right? So we can see that's going to come through at 3:30 a.m. Eastern Standard Time. All right. So let's take a look at the dollar index. Give me, hold on 1 second, everybody. All right, I'm back. So let's take a look at the US dollar to see where we are. Okay. So if we come to the weekly, right, you can see how we've been tracking. Okay, we're getting closer and closer to that high. It's just a matter, if tomorrow's news, right, forces us to that high, or we're going to correct just prior to hitting that level. Okay, so if you put your fib on your weekly, okay, and you run it long, you can see how this ABCD wave, see how we get this 8-6 pullback to monthly support? and then the dollar's just been running. Okay, just been running. So think about it. If you're, once you get this thing down, if you say I'm more of a positional trader, right? A position trader in this environment, if you're long the dollar, that's an easy ride, right? Just been long the dollar, right? Against your currencies, just long the dollar. So what is that? Since when was that low in the zone? 2021? Like, it's just been running to the top side. So we hit this D extension. Okay, so we know we're at a potential exhaustion point. We're near a high. Okay, high since 2002, highest level since 2002, and so we're in some pretty high territory here. And then if you look at the daily, here is here's your latest fib. You got a new AB boundary here. Okay, so we may be due for a correction. Okay, a lot sooner than later on the dollar. Yeah, don't be surprised if we start to see some profit taking after tomorrow's event, especially if they come with that 75 points, which is what everybody is expecting. We may see some relief. Okay, here we are on the 4. Okay, see, it's just moving sideways a little bit at this 13,282 level. That's a daily level. Okay, it snuck in there. So we'll see. We'll see what it wants to do with the FOMC tomorrow. Any question on the US dollar? No? All right.
Hi, Benny.
Yes.
Yeah, how do you relate the strength of the dollar right now on the chart to that of the COT report?
To the COT report?
Yeah.
So what you'll look at is let me just click on it real quick. Let's go check it out. See where we are. And we want to look for dollar index. Okay, so we'll come and look at it, and we can see where our leverage funds. Okay, you can see, where are we? So we're still long. We're still starting to close out some positions. So you can see your leverage money is still long 60%. Right? Long overall. You see that? Short 39%. So you're saying it. So what you're seeing here is where you see that where they're starting to close out your leverage funds, some short positions. Here they have some short positions here closed out. So overall, this is just saying still bullish. It's still bullish. Right now, you may start to see it shift just a little bit, but we're still long, right? Your leverage money, your hedge funds, things like that, right? Which creates a lot of volatility in the market, still long, 60%. Asset managers long. So dollar bullish. We expect our corrections in there, but overall long. So that's what I'm seeing there.
Okay, thank you.
Yeah, you're welcome. Is that what you're thinking too?
Yes.
Yeah. So I'm still over the long term, still long the dollar, right? It's just a matter of when it corrects, how much it wants to correct. And technically, how do you take advantage of those corrections, right? So if we're going to stay long the dollar, then you're thinking, okay, dollar yen, if we get a correction, maybe I'm just waiting for a low price, to get back long. That's your overall bias. Maybe you don't want to play the corrections on the dollar, the 80-20 plays. You'll just wait for a low price and then look to buy it. So that's it. Good question. So let's take a look at some setups. I want to go down to this Euro NZD pair. They're starting to get, it's high in the zone. Okay, so if we come out and we take a look at the weekly, we are back again, revisiting this 169.27 level. All right, so it's been a strong push up. Now, if your sentiment continues to sour, right, that's typically not good for commodity currency, especially like the New Zealand, okay, like the New Zealand dollar, commodity currency. Risk off situations are typically not good for commodities. Okay, so we're into a key level, and if we come here, we can see how this is ranging a bit, okay, in the zone. So we got a beautiful pullback on this daily fib, right? A, B, right now that's our C, okay, and we pushed down, and we didn't continue that path to the D extension, and that's okay, right? We found support, and we pushed back up, but we're at a key level, and when we look at our stochastic, right, we're overbought, okay, we're overbought. Now, I typically don't use, a stochastic RSI for a timing mechanism, because it can stay overbought for 3 days, 4 days, if it wants to. It can go, it's at 95% right now. It can go to 100% and just stick there. But it just lets me know, right? It just starts to give me an idea that I may see a reaction here sooner or later. Denise, you have a question?
I do. I'm not quite sure about, I've always heard about this stochastic. So what exactly are you looking at to see that you're overbought?
Over my 80 mark here, over this 80%. Right?
Where's that?
See it? Sorry? You see it right here in the corner? This red line?
To the right or the oh.
To the right. Yep. So, let me there you go.
Okay. So you look at this 80%. And what do you do? Like,
and you're looking at it, it's about momentum, right?
Okay.
So this is just an indicator saying, hey, right, we may be in an exhaustion here soon. We're overbought, right? This thing can keep going up. It can go to 100%, but typically 80. Some people have it set up 70-30, right? Depending on what type of trader you are. But for the swing, right, I like it at 80. 20% is oversold, right? So what this is, so this can be used as like an additional confirmation. So if you're saying, hey, I'm at a key level of resistance, my stochastic, some people use MACD, some people use moving averages, some people look for divergence, convergence, right? It just depends on how you put your trade plan together. So this gives me an idea that, well, based on the way I have my stochastic set up, I'm overbought, right? So there's a point where we can see a correction. Now I combine that with, hey, I'm at this weekly resistance level. My weekly resistance level is in blue. So it may be time to see a correction here, okay? So maybe we come back to retest some levels, some lower levels. This is 165.47, that's a daily level. Okay, as we go down through the charts, the time frames, we'll see that there's some things in between there, okay? But this is just letting me know. It's kind of an alert, so to speak, for me. I don't try to time the market with it. It's just, wow, we pushed up. This is pushed up 1,000 pips, right? And we're overbought. So that's been going on for quite some time, right? Quite some time. Now we may, if this level holds, we may see a correction to the downside. Now I could decide whether or not, based on my strategy, if I want to take advantage of that, if that starts to occur. Okay.
Okay. Thank you, Benny.
You're welcome. You're welcome. So we're looking at this high, okay, and you can see, look, it's just boom. This is a huge range, okay, 1,000 pip range that's in. So we've got the fib, but we're in a range, right? Let's just move from top to bottom, bottom to top. Okay, now we're into resistance. So think about it. If we just look left, is there a potential for this to move back down? Maybe, right? We don't know yet, but I have to identify some things. Now, another thing, right? I'm starting to get some alignment here. I've got a stochastic here that was overbought too. Okay. Now your stochastic, as you move down to the time frames, your stochastic RSI is going to move a little bit faster from bottom to top, top to bottom. Why? Because we've got smaller waves. You're looking at a 4-hour chart as opposed to your daily chart. Okay. So the rule that I was taught is typically for a stochastic, right? we're looking between 7 and 11 candles for it to move from bottom to top, top to bottom. Okay, so if you're on your daily, okay, you're looking between 7 and 11 days. Okay, for that to make its move. All right, so when I was trained way back in the day, that was the general rule of thumb that they taught me. All right, so we've got a daily stochastic that's overbought. We're at a key level of resistance. Okay, we have a 4-hour that's overbought, right? And it's coming back down. Okay, you can see it starting to shift. So as this is moving down, you still see this pushing up. So you got a little bit of divergence there potentially. So this level is going to be key. Okay, we formed a swing high here on the 4. So if we zoom in, we can see that this is the weekly level, but you formed a 4-hour level. You see this higher, 2 to the left, 2 to the right. That's a resistance level. So if you put your smart resistance in, it's going to give it to you. Okay, so this is starting to hold a little bit. All right. Okay. It's like that. Now, so we see what the price action is doing. So now I start to add some things in, like my fibs. Well, I took the fib off the low. You can see here, just like we saw on the daily, where price made ABCD waves to the downside. Boom. You had a new AB boundary. Look, here's my A. Okay. We always say what? That's the bat signal. Here's my B. New AB boundary. We look for what? Price to react, either at the B boundary or at that 118, 127 zone after shallow retracement. It's literally the same thing over and over again. All right. So here's my B boundary there. Okay. So we had a new AB boundary. Like that. Bang. And we can see that price found that support and boom. Okay. So we had a new AB boundary with daily and weekly support, and look at the reversal right back up to the top of the zone. Okay. So now we're trying to figure out, hey, look, this last ABCD wave to the upside, look, A, B, C, D, A, B, C, D, A, B, C, D. It's overextended. It's beyond a 1.618. It chased weekly resistance. Everybody see that? Drop me a 1. Do I need to say that again? Let me know. If you know your ABCs, you can trade. Okay. So there we are. Okay. So we're just measuring the weight. We're just measuring the price action. Now we're exhausted. Went beyond 1.618. We're right here at this level. So it's just a matter of, do we want to hold? Okay. So technically right now, we have a new fib. All right, the smart fib to catch up to it. But this is really what this is looking like. But if we go down to the 1 hour, you'll see it already. Okay, so look, we come down to our 1, it's already showing up. Okay. This is this 80-20 zone. Okay, this is this 80-20 zone. But the question is, okay, do I have, right? Is it just going to continue to move sideways through this Asian session? Or do I have a little bit more momentum that'll push me up a little higher to this 127? Okay. Why am I thinking that? Well, because I've got a daily stochastic that's aligned. I got a 4-hour stochastic that's aligned, but I've got a 1-hour stochastic that's in my buy zone. You guys see that? Drop me a 2. Okay. And I'm moving sideways a bit here. Okay, part of that is, hey, I'm in an Asian session, lower volatility session, right? But hey, we're at a resistance level. Okay, we got some equilibrium here. Somebody's got to win this fight. Okay, but you could just see how these waves just continuously play out. A, B, C, D, A, B, C, D, right? A, B, C, D. You ride it until it fails. So now, even if my sentiment is bullish, okay, when it comes to the Euro NZD, we know just by wave sequence, we may be due for what? A correction. And I have to decide, well, if my sweet spot is that 80-20 zone for counter trend trades, do I want to take this opportunity? If the answer is yes, then I have to decide, well, how do I want to enter this opportunity to the downside? Right? Do I want to use a cloud? Do I want to use a trend line break? Right? Off the 1, off the 4. Some people like only trading off the 4. Do I want to use a trend line break off the 15? Do I want to use a trend line break with a pullback? Right? 9,000% of your strategies oftentimes that you see on YouTube and floating around are mostly based on entry strategies, right? Entry strategies. They leave out all the other stuff a lot of times. It's around entry, right? And that's where you get a lot of your indicators, strategies, and things like that, right? But how do you get to consistently get to an area where you can make those entry decisions, right? That's the key. That's what we try to teach you here in the Forex trade. All right, so this is where we are. So this is one to keep an eye on because we're in the zone where we may get, right, a correction to the downside. So if we come just to this 382, okay, so your NZD is almost just 230 pips. Okay? So we have some people, right, they trade small, 0.25%. They're in already, right? Because they're gonna build a position, right? So you may be in this short already, and you're putting a stop on it. You say, hey, if it pushes me on, I'll get stopped out. I'll reevaluate. That's part of the game. Some folks are saying, I'd like to stay with the trend. I think this is going to stay bullish. So I'm looking for price to move in the same direction, but I'm not going to trade it. But when it gets to my sweet spot to buy, then I'll look to get long, right? Everybody follow me, drop me a 3 in the chat. Right? That's the game we play. Try not, and it's tough when it comes to trading. Try not to overcomplicate things. Okay? If you use a smart trader, you got smart fibs. My directional bias is bullish, so I'm going to deploy my fibs in a bullish direction. Start there. Okay? Start there.
Hi, good night. Where did you start your fib? Mine looks a little different.
On the one I just came to the low, I believe, right off the low. Right.
Okay.
I just came right off that low to track that price action off of this. I had it in here before. We're in a trend line break like so, like this. Right. I was looking at that smaller impulse move like this, right, to the upside. All right. And then here's the 4, my 4. Okay, like that, into that zone. So I'm looking for the potential of that Euro NZD. All right. And it becomes simple, right? If I'm wrong, I have a stop. That's my peace of mind. Okay. So I don't worry about whether or not, I'm gonna lose the trade. What I worry about is price in my zone where I believe I have an edge ultimately. If the answer is yes, I work my risk management out and I take it. I take the trade and I sleep peacefully. Okay, that's the game, right? It's always about the series of trades. So I don't get too caught up in the wins and losses. I'm more concerned with, am I following my rules and am I taking trades in the zone that have given me an edge over time? Right? You guys, yes, no, you guys get me with that thought process. Because once I got that down, trading became
absolutely.
Thank you, appreciate it. Because once I got that type of mindset down, trading became way less stressful. Way less stressful. Okay, so that's the Euro NZD. Any questions on that? All right. Hold on 1 second. And all right, I think we are good. Ryan, sir, how are you?
My brother, I'm doing well, man. I'm doing well. It's been a good day. How are you? What's up, everybody?
Oh man, doing great. Doing great. It's always a great day, man. Always a great day when I'm above ground. So
yes, sir. It's an opportunity, man.
Good. Anything else, I just shake it off. So I'm good to go. So as long as I'm here, I got a shot. So let's check out this Aussie NZD real fast. But before I move on, Ryan, we went over fundamentals. Anything that you've heard in regards to anything surrounding the rate statements?
My bad, Benny. I'm sorry. What did you say?
I said, is there anything that you've heard in regards to the rate statements that are coming up? Anything new?
Nothing new. You covered it. You know, they're looking at 75 basis points. The thought of 100 basis points has decreased quite a bit. So you covered it pretty well at the beginning.
Okay, cool. Appreciate it. Oh, hold on, everybody. I am losing it. I've got two articles to share from one. I think they're both from Reuters. Regarding the Swiss National Bank. Hold on. Let me get this over to all of you. Post that in the chat. There's one. And here's two. And there's a third for Bank of Canada. Okay. There you go. Almost forgot those. All right, so we're good. We're good to go. So I want to take a look at this this Aussie NZD. And you're welcome. You're welcome. All right, so running, right? Look at that. It's making a big move weekly. Okay. Look at it pushing up through that zone. But we just broke a level of resistance, weekly resistance at 112.91. Okay. So the question becomes, we scored a point, meaning we broke a level. Do we want to pull back? Okay. To retest it. So as we work down through the charts, we can come to our daily Aussie NZD off the low. It's a choppy pair. And you can see where we are overbought. See our zone? Overbought. Okay, 90% we're at. And we're coming into this 80-20 type of scenario on the daily. Okay. So that lets us know that, okay, it's been making a run. Maybe it might be correction time. All right, so how do we get involved in that? Well, we come on down here to the 4, and you've got some good alignment, right? You've got your stochastic. Okay. Overbought. So when we say we're overbought, that means that now this is in the sell zone, potentially, okay? Now, we just formed resistance here at 113.62 on the 4, and we're right in our sweet spot at 80-20. Okay. Now, if we can get price to gravitate back to the resistance level that it just broke, it's 50 points or so, back to your B boundary. It's 90 pips, back to your 382, it's 200 pips. Okay, it's 200 pips. We know that oftentimes the market loves to fulfill a 382, right? Big moves. Okay. So based off this 4 hour, how do I do it? Did I see this move, right? Coming out of the weekend, and I've got this level tagged for a sell limit entry, 0.25% or so? Or do I just use this as, hey, this is an area of a possible U-turn, and now I'm gonna go down to my lower time frames and wait for trend line breaks, right? Or on the current time frame, right? Same thing, same thought process. Or do I want to see it break trend line and pull back? Right? Do I want to be conservative, break trend line, have it pull back, and then take it? Right? Maybe that's what I want to do. Maybe I want to go down. Right? Here we are on the 1. Again, right? I've got a misalignment. We want to see this push to the sell zone too. Okay. So now it's moving sideways. So do I want to play the trend line game? Okay. See how this accelerated? How trend lines help you with the direction, speed, and momentum of the market. Look how prices just accelerated. You see how steep, right? These trend lines are getting. Okay, that's a sideways move. I might move it to the outside there. That's consolidation. See if we can get a strong break. So now it becomes, I've mapped this out from the top down. I got a possible reversal. So maybe I wait, right? See if price pushes down and pulls back. Maybe I want to see a little bit more. I want to see it push down, break support, and then pull back. However you want to do it, the key is to first be able to consistently get yourself in the area of the potential U-turn. Okay. That's the key, because that's where you can start to develop some consistency, right? Or you might say, you know what, I don't want to use trend lines at all, but I will put my cloud. I'll put my cloud on, and I'll start to watch it based on the cloud, and I'll use my cloud rules. Okay. I use my cloud rules. Maybe I want to be more aggressive and come out to my 15-minute chart. And I'll come to my 15 and I'll look and start playing setups from the cloud from here. Or maybe I'll play my trend line break from here. Okay. See? Okay. And if my cloud, if I meet my rules, then I'll attempt to get short. Okay. That right? You as an individual have to figure that out, because you have to live with it at the end of the day. Nobody can make that decision for you, right? You may have a moving average crossover that you'd like to use when you get to the point, where price could exhaust and reverse. Okay, that's totally up to you. You might use a MACD, right? You may use something else. But the key is to be able to do your top-down analysis to get to these areas consistently. That way, you're not hopping all over the chart. Okay. Questions on the Aussie NZD. Same approach. Same approach every time.
Hi, Benny. Just a quick question. Is it possible to use trend line breaks in addition to the cloud, or you think that would be too much?
It could be too much, but if you make it work for you, like here, if you're saying I'm using this inner trend line break back to the cloud and support, that's just extra confirmation that, hey, I may find some resistance here at this level. If I take this now, like if I use just, because the first thing we get, right? So you may come in here and say, you know what? I'd like to jump this early, right? But I can use these confirmations. How can I use these confirmations, Betty? Well, I can use this as to say, first, if I get this trend line break and it's followed by this TK crossover, and this Tinkerson and this Peterson floats over price, I'm short. All right. So I know where you're going with it now. And I like the way you're thinking. Right? Because it's like, man, your cloud is more conservative. Okay. The cloud is more conservative. It doesn't get you in as aggressively as, the trend line, break technique does. But you can use this as extra confirmation. So you might say, oh, I got a trend line break and close. Okay, I'm starting to get the tinkers and the keeches in the cross, right? And then what's going to happen next is you're going to get your here's my tool. You're going to get your lagging span to cut below price, right? So if you want that additional confirmation, you can do that, right? Take it back to the cloud, then make your decision from there, and that might be how you go about it. Follow me on that?
Yes, thank you.
You're welcome. You're welcome. Right. Right, because that initial move, right, just depends on how aggressive you want to be, right? So number one, you're going to see that TK crossover come, right? Well, before that, you're going to see that trend line break. Then you're going to see that TK crossover, right? So that may be your signal for entry with that, okay? Because this is like even though the math isn't the same in how these averages are derived here, right? It's not taking the average, it's taking the high and the low, okay? That may work, right? It's kind of like how people play moving average crossovers. That may be your thing. You say I'm in, and you might say, I like to run my stop loss tight. Okay, so you're putting it above the high prior to crossover. If you get that, however that works out, however that's going to work out. And when you get that break in that crossover, then you may get short, and then you can set yourself up from there. Can I get a 2-to-1 out of that, or however you want to do it? But that can be a game plan. That could be a game plan for you. A solid strategy. The key is test it, see how it plays out over time, and if you have some success with it, then go for it. Yeah. Any other questions on the Aussie NZD?
No, sir.
All right. So I want to take a look at this pound Swissy. I haven't looked at the second half of the day. I know it dropped earlier. And it's just hovering, right? It's just hanging out in the zone. Okay, so look. See what's going on the weekly. Okay. It's pushing bearish. It's been pushing bearish. Why? Because people were starting to price in. They were pricing in, right? The 75 basis points coming for the franc. Take them out of negative interest rate territory. So look at that, strong. Plus, right? The pound has just been weak. It's been weak. The price only goes down so much before it corrects, before we see a correction on it. Okay. So this is pushing bearish. You can see that it just took out the all-time low. So it's moving. So if we come to the daily, this is like the longest running fib in history. It's trying to get there to this D extension. But it just shows you the power of the sequence, right? It's heading there like a magnet, right? It's just pulling it down towards it. It's pulling it down. There's a 1.618. We got a little bit higher than a 382, and it's just been moving down all this time. Exactly the little engine that could, for sure. This is moving bearish quite a ways. But here's the thing, right? So we're starting to see that, hey, look, we just double bottomed, right? Okay, oversold. We just broke through this 111 area. So we know that price oftentimes like to do what? Score a point and pull back. So it's just a matter on our lower time frames. Is it going to do that? Maybe it will, maybe it won't. All right. So we're looking at this 80-20 scenario. That's my zone, right? So if I'm playing this, and this is my zone, and say I entered that trade, I'm in drawdown right now. That's okay. That's okay, right? You got your risk management worked out. Let it do its thing. Okay, let it do its thing. All right. So now it's just a matter of our stochastic here. It's still right. We're not oversold yet, but it's trying to hold its own around in this area. Right? So it's just a matter of doesn't want to make a move prior to hitting at the extension. If it hits the D extension, the game resets again. We'll have a new AB boundary, and then we'll revisit it. Okay, but here's our 382 here. It hasn't fulfilled it yet. It's been struggling in the zone for a while. So now, right, if we get back there, that's a 300 pip move. If we get back to this daily level that it tested, right, and stay below, that's 160 pip back to that level, that B boundary zone. All right, so this is the zone. Okay, so now it's just a matter of, right, do we want to make a reversal at this point? Maybe we do, maybe we don't, right? Simple trading. Draw your trend lines. Hey, maybe you put your cloud on. Okay. That's what you want to use. That's easier for you. Put your cloud on. It broke it earlier and then it pushed right back below it. So it's just moving sideways, right? These out of here. So it's just moving sideways. Okay. So what we're looking for is a reaction. Can we get a reaction prior to the D extension being hit? We shall see. All right. We shall see. So just continue to wait. Be patient. Right. If you limit it in, you're floating 0.25%. You already know how much you can lose before you ever get in the trade. We cannot stress that enough, and how that really, really, really eases the pressure on your trading career. Work your risk out before you hit the buy or the sell button. All right. If everybody gets that, please drop me a 4 in the chat. That is a must. We have got to know that. Okay. All right. That could help you stay in the game. That could really help you stay in the game. So that's the pound Swissy there. So we'll continue to monitor that. All right. So if you've got a trend line drawn, we don't have a trend line break yet or anything. Okay. So here, let's take a look at the pound Aussie. Okay. And we come into and we look at, right, where are we at on the weekly? It's been bearish. Okay. It's been bearish. It's just hovering a little bit. We come to the daily. We never got a 382. We're sitting at daily support at 168.70. It's trying to get a reaction, not getting it quite yet. Right? We're not quite overbought. It's just hovering, right? Just sitting there. But we have to pay attention to that, put it on the radar, because it's in the zone. If we come here and we look at the 4, right, and we take a look, we can see that it's just sitting there. Right? So nothing yet, right? If we start to break above these levels, here's another off this high. I want to put that in there. Okay. That one's low. I want to put it right here. This one is the one I'm focused on. Like this. Right. If we start to push up, start to take out some highs, then price may be ready to make its way. Okay, to correct a bit. But we'll see. All right, that was kind of just dancing all over the place. Nothing yet, but just know, covering this one just to let you know that it's in the zone. Okay, the extension is way down here. So let's see what happens with price and momentum as we carry throughout the week with all the statements and everything coming up. Any questions on the pound Aussie?
Oh.
All right, cool. So another way you could play these, right, is you're looking for more confirmation. Hey, I know I'm in a zone where price could eventually reverse. Well, what you do is you could come down, right? For example, to, and this is with any of these pairs, right? We could come, I just want to get a decent trend line on this. So we could come down to our lower time frames, 1 hour, 15-minute, however you want to trade it. Okay. And knowing that I'm in a zone for my higher time frames, oops, I manually draw that one. Then you could just sit and wait and say, hey, I'm in a potential price reversal zone. Like so. But I'm not going to budge on anything. What I want to see happen is I want to see this price get long, right? Break above some levels. There's that level there. And then pull back. If I get that type of momentum, then I can put my fib on there like that. And when I pull back to my sweet spot, right? Okay. 1618 zone, 786 zone, right? Some people like the 50 restructure. When it comes into my buy zone, right, then I'll look to take the trade. Okay. You don't have to be in a rush. You did all the hard work, right? You did all the hard work, all the prep work over the weekend and get your chart set up. Let the trade come to you. Okay. You don't have to feel like you're missing out on anything, or I have to be in the market, or I have to have a trade active to make money, right? Because what difference does it make, right? Is when the trade finally falls in your lap, you're gonna make that money with less time and less stress. Okay. Think about that. So just wait. Know what you're looking for. Know your game plan. And if the market gives it to you, then you act on it, because that's where your edge lies. If it doesn't, then you just let price action go ahead and do what it's going to do until it gives you another opportunity. Okay. So that's how you can play that. You can play any of these setups like that. Any of the Aussie, if we go back and we take a look at your Aussie NZD, for example, right? You can wait for this, right? You can wait for that price to break trend line and then, right, give you some downward momentum, right? And then pull back to whatever level you have set. Then look to take the trade, okay? If it gives you the break and everything lines up, okay, you got your fib and it pulls back to your level, then you take that setup. And if that's your edge, you do that over and over and over again, the exact same way every time. If my zone, right, to sell, right, the setup is my 61.8 or above, and if this trade doesn't quite get there and it hits a 382 and it drops, if your trade plan doesn't call for you taking those setups, then you pass. Then you pass. If this is going to be a major correction, 200, 300 pips anyway, it's going to give you another opportunity. It's going to finish out the move, right? It's going to finish out the move. You're going to get a new fib. And then you have that opportunity. And maybe on that opportunity, it pulls back to where your trade plan states that you could take the trade. Be stubborn when it comes to your rules, right? Come on now. You guys got family and close friends that you don't even let borrow money. Take the same approach to the market. Be stingy with your money. Don't just throw it out there, right? Even if you're trading in the demo, right? Rules are important. Okay, so that's that. Another one I'm gonna take a look at ahead of tomorrow. Well, all the dollar pairs, but this UCAD. Okay. This UCAD setup. Right. And we see, look at that. Look at that strong push, right? Coming into this 134 level. Okay. Push right through 132, 134. All right. From the weekly. So when we did this top-down analysis, like, hey man, where can we get a potential reaction? Right? Where can we get a potential reaction? It's been choppy, but look, it's been moving up. Now, look at what we're approaching at that 134 level. An extension. Okay, an extension. We're overbought. Okay, we're overbought, but that's a beautiful, right? when you do your homework and you look for masterful setups, daily support, a 61.8, tweezer bottoms, and in essence, morning star type of setup, decision, bearish, indecision, tweezer bottoms, rare, decision, bullish to the upside, and it's gone, right? Candlestick, sign language of the Forex market, okay? So that's just beautiful price action there. Running right into that extension, okay? So now, as we approach that extension, is 134.18. We've got a shallow retracement that held at this weekly level, retested, broke through weekly level at 132.25, retested, pushed up. We don't have a 382 yet, and we're moving right up into this 134 level, 80-20 zone. So tomorrow, it's going to be interesting to see how the market reacts, whether or not it just pushes right through with the FOMC meeting, or if we get it to push up there and it holds and it corrects. Can't predict the future on that, but just know, right, that we're coming into a critical area for the dollar. So it wouldn't surprise me if we have the release and then it's followed by eventually a sell-off, whether it's at this level or once it hits this D extension for another correction and retest at 134.18. So that's another one to look out for. Okay, but this is a beautiful move. Now, when you look at this, you may say, well, I don't like holding trades that long, and that's okay, right? That's okay. You don't have to, but that's over 600 pips it's going to be by the time it hits that D extension. But if you trade on the lower time frames, say your 15-minute, your hour, whatever, doing your top-down analysis, if you're a day trader, what this should tell you is that I have over 600 pips of buying potential. So if you want to trade in and out of that position for over 600 pips, that's fine. That's okay. Maybe you go down to the 15. Okay. Let me pull up a 15-minute chart. I've got it already. Hold on. Let me just clear this, right? Because you can see, regardless of the time frame, the market's going to move in waves. So you can see something like this on a daily. Okay. You spot your level. Okay. Whether you see this or not, spot your level. So I'm gonna pull this daily support back down to the 15. I'm gonna take this circle down to the 15 so we can identify where we are on the chart. Okay. Scroll back, here we are. Okay. So once I'm at this point, see, here. Once I'm at this point here, okay, and I'm at that low, we know what that represented. It was daily support with a 61.8, all the way from the daily time frame. Okay. I could come here and I'm like, oh wow. Okay. Here's my target. And we'll make this red like this. Okay. That's why we say what we teach can help anybody, no matter what style of trader you are. So that's that 1.618D extension on the daily. Okay. Now, I know where that target is. Here's my target, potentially, right there. Okay, that's my daily 1.618D extension. So what you could do is you could start coming down to your lower time frames and say, you know what, I'm looking bullish. Right? In addition to the fact that I know I'm trading the dollar and I understand my fundamentals, I'm looking for bullish buying opportunities for over 600 pips off my 15. So I'm looking to trade C to Ds. Right. I'm looking to trade C to Ds. Okay. Look, there's an 80-20 on the 15. Boom. Okay. So if my target is a 61.8, yep, I had a little drawdown. There's my 786, but ultimately, it took me where I wanted to go, right? So look, here's my C, my lowest point within my AB boundary, which becomes my A. Right? When you just make this up, is what happens in the market. And now this is where I'm at currently. And there is my daily 1.618 D. On that 5 minute, 15 minute. Okay, it's just a smaller wave, but you're still moving in the same direction, right? So if I come here like this, right, and we got our move up, do it like that. Okay. We'll link that down. Right, you can see that regardless, it's just a smaller wave. See? That's what we mean by your higher time frames control your lower time frames. When we shifted to a C to D push zone on a daily, your 15-minute waves, even though they're way smaller, they start moving in an upward direction, right? So that's what we mean by that, okay? That's what we mean, right? There's the low, there's the C. Oops. Right? And there are my ABCD waves. Questions?
Great breakdown, bro.
Appreciate it. So if we look at something, some of these pairs, right? And that's why we look, okay? And we look for those exhaustion points and we trade the reversals because we're looking for prices, whether it's at a 61.8 on a pair, right? So if we look at something like the Euro GBP, right? That finished out, right? You guys remember this when this was here? Okay. Said buying opportunity, daily target at 382, right? So when you come to the daily, there's that daily 382, right around this area. Put a target right below that, but there's the zone, right? Because we know we can get a reaction right before it gets there. So there's a daily 382. Here's the extension off this wave, okay? So that tells me, look, I got all type of confluence here. Here's a weekly D extension in this zone. All the way from the weekly, everybody, look. Larger waves, smaller waves. A, B, C, D. Okay. We have AB boundary, shallow retracement, less than the 382. All right, we know the market likes to seek out that 382. Here's all types of confluence there. And it took it forever and a day, but look at where it's moving. Here's the wave. So even here, okay, I know now, right? I've got, it's over 400 pips of buying potential if it wants to go for that 382. That's why we wait patiently for the big moves. That's why we trade small, because you could build the position. It's moving 400 pips. You could build that, okay? You could build that position by tracking the smaller waves, okay? If price comes into my zone, I want to buy. Didn't happen here. Price gives me a pullback, healthy pullback, I want to buy. So now we're in a situation again where I got monthly level that I broke, I'm retesting it now. 87.21. So it's just a matter of now, look, there's my weekly 1.618 extension. All right. So my weekly level. Here's my daily D extension, 382 zone, all of that right here on my 4 hour, right? It's kind of almost like the cloud. We can just look at everything at a glance on one chart when we do top-down analysis, right? I don't even have to go all the way up to my daily chart or weekly to know where I'm at. I've got it already. Right? So now, okay, it's a matter of, do I turn over and go deeper before continuing long, or do I press up here and I get another, don't want that, and I get another shallow retracement type play like I have it drawn out, right? Do I push up now and then correct? And then if it gets there, do I want to short that? Or do I want to wait for a low price and then see if price is going to push through that zone, right? And head to my 4 hour D extension. Same stuff, same stuff. Okay. But identifying and setting some targets from the higher time frames and understanding where you are from a wave perspective can help give you those longer term targets. So maybe I'm not so anxious to jump out. Oh, I'm up 50 pips. Let me get out to trade. Maybe you reduce it. Maybe you take some profit. But if you're swing trading, you say, you know what? I'm looking to add to my position potentially. This trade's got 350 more pips to go. It takes a while to get there, which is psychology. But if you continue to put the time in on the charts and as Ryan says, short for yourself, then you can do it. No shortcuts, right? No shortcuts. Takes work. But that's the entire methodology in a nutshell. And we've gone through multiple pairs. Doesn't matter the asset class. Doesn't matter. Right? Same approach every time. We don't go in and mark up the charts any differently, right? Because it's a crypto. Price action is price action. That's an ABCD move. See if it gets there. Right? Set your charts up, let it run. That's a beautiful morning or evening star. Decision, indecision, decision to the downside, key level trend line. It's down. Right? No guessing that one. It's down for Bitcoin. Right? That's it. It becomes super simple the more and more you do it, but you got to do it. Questions?
The more you do it, the better you become.
That's it, right?
The truest thing.
That's it. That's it. So that's where we are, everybody. It's Cash Swissy. Right? I think we put that in the Telegram, right? Thought we did.
A while ago, yeah.
Yeah, that's moving. I think I put this 1 hour fib in the Telegram because it was a good pullback. So that's shortened, right? So that's coming out of the zone, right? Already 75 pips or so. Here's your D extension at weekly support, all right? Which is moving down. Look at that. That's your major move. Look, A, B, C. It's coming into your D extension. I ran these sub fibs off for a smaller play, but that's your major 1 hour fib there. Okay. But you see how you can run your sub fibs and it gives you other opportunities to add to your position if you want, or get an initial entry. See, I broke that weekly level 72.91 and retested it in confluence with your 61.8 off that fib, and now it's falling right in line, right? So that's where it's heading to finish out. But that play originates, right, from the higher time frame. See? Right? Okay. Just as your dailies, right? Look, way oversold as it comes into this support. That's that, everybody. Great session. Great questions. Ryan, anything to add before we close out?
I don't, man. I don't. Great session, great breakdown. Come back and study this session, good people, if you need to.
All right. Well, hey, have fun with everybody this evening. Awesome session. Look forward to seeing everybody 6:30 a.m. Eastern Standard Time with my awesome partner, Mr. Ryan Carthage. Have a good night, everybody.
Thank you.
You're welcome.